You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's popping off in the world of vol? Well, let's find out together, shall we? It is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com. Hope you're having a great start to your trading year. Remember, if you want to continue the party after the show, only one place to go. Theoptionsinsider.com/pro is the place to go to get weird, to get wild, get funky with a little bit of the old oddities. It's been wild of late. Some of the trades coming across the radar have been interesting, to say the least. And a lot of them have been surprisingly, let's just say, they move pretty aggressively. Let's just put it that way. So if you want to check out what the hell's going on out there, check out some of the ones we talked about recently. You get all the archives as well. Remember, theoptionsinsider.com/pro. Giveaways, pro Q&As, just a party being had out there. If you're hanging out in the chat today, I might be doing oddities a little. Might be doing it right after Vol Views today. So stay tuned. A little bonus early oddities for you folks out there. So a double whammy right to the heart there. A little bit of oddities. Check it out on the Pro if you are so inclined as we go around the horn and see who's joining us on the old program today. First, let's go out for the first time in the new year to the Southern Volatility Mecca. I haven't been there in a while. I hear it got some snow, or there was snow adjacent at least. I'll put it this way. More snow in the Southern Volatility Mecca than there was in Chicago of late, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show. Happy New Year to you. And did you buy a snowplow, or a snow shovel, I should say, in Texas?
No, but Happy New Year, Mark. Yeah, we got almost an inch of snow that disappeared by the afternoon.
Did your kids freak out? Like, what is this white stuff?
Oh, they canceled school. They canceled everything. In the morning, I got up and Valentino and I recreated the famed ice bowl and played some football in the snow.
You just tackled your kids in the snow. There you go.
So he was very excited.
That's awesome. Is there even a snowplow within 100 miles of Austin?
I have no idea. I doubt it. But people do not seem to know how to drive in ice and snow here.
I would probably wager that is the case. There's a few pickups around. They could probably slap a plow somewhere onto the front of one of them if they had to. But yeah, wild times when it's snowing in the Southern Vol Mecca and not a sprinkle, not a dusting to be found up here. Interesting times we are all living in as we keep rolling around the horn. Let's go out to the hinterlands of Chicago next, where he is joining us slightly under the weather. I think he got a touch of what I had a few weeks ago. It's still kind of lurking in the back of my throat, but I do talk for a living, so that kind of exasperates it all the time. It just makes it worse constantly, listeners. But we are joined once again by the doctorist of VIXs, aka Mr. Russell Rhoads, holding court at the University of Indiana. Mr. Dr. VIX, welcome back to the show. How you feeling, sir?
The jerks caught up with me because I'm teaching undergrad again. I'm teaching undergrad derivatives, and all three of the people that are on this program with me might get to be guest speakers if they behave today.
Ooh, fingers crossed.
Yeah,
lucky us.
I want to come get some of those sweet University of Indiana germs. You gotta stop getting so close to your students. You gotta stay remote. That's the best way to do it. You know.
I wish I never had to leave my home office.
So, Mr. Rhoads recovering, and then joining us here for the first time in the new year. It's been a while since he's joined us on VolViews, since back not that long after the big meltdown last August. We are joined once again by our old pal, the options guy, now the proprietor over there at optionsplaybook.com. Mr. Brian Overby. Mr. Options Guy, Happy New Year, and welcome back to VolViews to you as well, sir.
Well, thank you. And also, we had a little bit of snow down in Charlotte, North Carolina, too. So we got part of that luck that Mark did. It was enjoyable to see a little bit of white frosting on top of the grass down here.
Take that, boat guy, living that sunny Crockett life. You got snow, too. So there you go. Snow for the two of you, none for us here in Chi-Town, as we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, let's get down to business with a little bit of vol reviewing. And man, another wild week. We were flirting with the new all-time highs yesterday on the option block. Tusaw is very excited. Mid-rant, he got to actually say his favorite saying, so he got to actually call it out in real time, which is a rarity. Usually it happens a day before, a day later, maybe an hour or two before or after the show. This time, during the show. So, of course, we hit new all-time highs out there in the S&P. Given some of that back out there today, it's not a bloodletting by any means. It's more of just a gentle easing into the red. S&P off about 0.25%, Dow off about close to that percent as well, and the NASDAQ closing in on off 0.5%, about 0.4%. And our old pal VIX Cash, as we ticked off the show, was right around 14 3/4, which puts it down exactly a point from where it was this time a week ago. Of course, if this red continues, we might start seeing that firm up. Should be an interesting time indeed. And our old pal VVIX at a 99, exactly unchanged, exactly where we were hanging out a year ago. So vol seems like it's kind of poised to make a move somewhere. It's going to retreat back into the Trump era nadir of 2017, or it's going to get explosive again, one way or the other. But VVIX kind of hanging out poised right now. Coiled spring. Right around a 99, unchanged from last week. Let's go around the horn. Let's go the way we started. Let's go out to the land of the Southern Volatility Mecca. Mr. Mark, we'll get to this week in a second, but because this is the first time you are joining us in the new year, I will ask you the question I've been asking everybody so far this month. When you look back at the mad, tumultuous vol year that was 2024, sir, what really resonates and stands out to you?
I think the big, how quickly we would get these pops and how quickly vol would recover. But we never really had like a period of low volatility. It was like we were in this 14 to 17 range where kind of get a little oversold, we'd pop, we'd get a little overbought, we'd drop again. We played a lot of volatility whack-a-mole in 2024. With one big vol event that got faded way faster than I'd ever imagined. And then I would say the other thing in 2024 is we really started to see what zero DTE could do to near dated vol and how it affected. We started to really get a real glimpse on how it affected event movement. That's probably my best breakdown.
Yeah, we talk about that a lot on the show, that you always kind of have to be ready to capture those vol pops in VIX, but last year really personified that, with the exception of a couple of big moments. you had hours, if not minutes, to really monetize a lot of those big vol moves to the upside. So we say that a lot on the show. We're not just messing around, listeners. It usually comes to pass out there. All right, speaking of things coming to pass, Mr. Meatball, another kind of weird week, a wild week. We're threatening highs. We're kind of coming off them now. What's been catching your eye out there in the vol markets this week, sir?
Yeah, well, the S&P did break 6,100, closed at a new high. I got to tell you, I was surprised at the way vol did kind of, mostly recede most of the week. It was a pretty ugly week. Started the week, at near 17, and are going to close the week potentially below 15. I think Wednesday and Thursday next week are going to set the tone for volatility and for markets for the rest of the quarter. In a 26-hour period, we have the FOMC, Meta, Microsoft, Tesla earnings, and then the next day we have Apple earnings, and you can throw an IBM and a few other major earnings during that window there that it is going to really, like I said, set the tone. So I'm surprised we're seeing vol pull back, but if you're wondering why we're seeing, it as high as it is, despite kind of this nice rally, I would say it's that speed bump next week. So that's kind of what I see in vol markets for the week and ahead.
All right, and Mr. Sonny Crockett, living that boat life, except when it snows. I will ask you the same question, sir, as it is the first time you're joining us this year. As you look back on the turbulent vol market that was 2024, what stands out? What resonates to you, sir?
Well, Mark did such a good job of summarizing everything that happened. I just think I want to toot my horn and talk about the fact that on this show, we actually said, let's do a broken butterfly. And I don't want to say a broken wing because it just was a little bit of a different butterfly. And we did it at the end of October. And boom, we said very next day, that was one of the run-ups that Mark was talking about in the VIX. And it did happen. So heading in, I guess it was the end of September heading into October is when we did that. And I just thought it was fun because the trade actually did it. Nobody really knows why in October. Vol has a tendency to run, but September and October didn't disappoint this year. And besides that, that there really wasn't any events that really happened in Vol. Going into the election, we saw a little bit of a run up, got a little short Vol just heading into that big event. For some reason, that was a bigger event than normal with the passing of the guard. And we did see Vol drop off on that. So those were probably my two bigger trades that I did on the year.
I normally don't allow the horn tooting. But since I bought that fly and it worked out pretty well, I'll allow it. That's a pretty good little bit of horn tooting there. That was a little gift for all the listeners of that show, of that episode, sir. So I'll allow it.
Because it happened the very next day, if I recall, right?
It paid off almost like a day or two later. I think it was, obviously the show's Friday. I think it was a Monday or something where it just took off in the direction of that trade. But interesting stuff. Way to remind us all that, hey, you made some money for the listener. Not the worst thing. And then what's catching your eye this week, sir?
Well, I'm not following the ball as much in that I was looking, I don't trade vol every day like Mark and Russell do. But my trade is going to be a little bit looking for volatility, and I'm going back to the wheel. I don't want to jinx myself, but none of these trades that I'm going to mention have ever not worked over the past couple of years. And so I'm looking at the Russell 2000. I'm thinking that now the inauguration day is over. There's going to be headlines that are going to hit the market left and right, and small caps are going to get blindsided by it. And if you take a peek at the chart, we're right in an area of flux in the IWM. So here's my volatility play as I'm looking for volatility in the small caps, and I'm trying to take advantage of it by being long a straddle. Right now, I got in a little bit earlier on it, but I don't mind it right here at the 230 level. Right now, the Russell is 229.19. So just buying the most at the money straddle, expecting over the next 30 days that there's going to be some headlines that are going to hit in the marketplace, and we're going to see at least a 10-point move. You can go out about 30 days and pay $10 for the long straddle in the Russell 2000. And if you go back and just look at the chart, you can see that 10-point move in the Russell 2000 index is nothing, relative to what it's done over the last year on a 30-day basis.
Going right back to the well, sir, here. You realize if you recommend a trade now, sir.
I know I'm a little nervous because it's like 10 for 10 right now. I'm batting 1,000. So I'm a little nervous to put myself out there, but there you go. It's done. I can't take it back.
If it doesn't work out by Monday, folks are going to be grumbling. So they better have cash in their hands instantly. Otherwise, the hate mail is coming to Mr. Overby over there at optionsplaybook.com. Stay tuned, listeners. He'll be joining me on Oddity, so maybe we'll have some other fun trades we'll be breaking down there in a little bit after this show as we keep on rolling. I bought him time for his voice to hopefully recover. Mr. Rhoads, we've already talked about your glancing back into 2024, but what is catching your eye out here in the kind of interesting, somewhat head-scratching week we have so far, sir?
Well, one thing with respect to 2024, we learned that you can't trust the VIX quote during the overnight hours. I did want to remind everybody of that one. Remember, we got, up to like the 60s or something on no liquidity back in August?
Yeah, that was a bunch of nonsense.
I don't consider that. I think what we learned last year was to get a real feel for how VIX is telling you, et cetera, you got to adjust things and only look at VIX during the regular session. And I continue to, as we go through time, I continue to parse data. So I have those numbers because don't necessarily trust the illiquid markets, 45 minutes to a half hour before the official market open. Looking forward, it's tough because he's a volatile guy, but he presided over a very non-volatile market. So I'm thinking about, selling a near at the money call on a consistent basis and using that money minus a little bit so I can do a credit and buying some out of the money calls, because I do feel like we're going to get a volatility event this year, but I think it's going to be, you're going to have to pray. Basically, you got to be Brian Overby and be absolutely perfect on your calls to catch it. So that's what I've got kind of sitting out there on top of everything else that I'm doing for this year. Jocularity. Yeah. So I thought I was going to get replaced on the program after that trade back in October.
He did crush it.
He did crush it. So I'm being 100% complimentary here. It's all you, man.
2 thumbs up.
We are kind of back in that paradigm now of, what's he tweeting today? We were off of that for 4 years. No one was hanging on Biden's tweets every day before they started trading. But now we are kind of seeing that. The liquidity in the early part of the session's a little bit different now. People are keeping their powder dry until they see what is Trump on about today? Who is he attacking? What name is he talking about? And then they go from there. I was just down at a big securities conference in Chicago this week, talking to the Flowmaster and others, and they're all saying kind of the same thing. We're kind of back in that world again where the big capital's not really committing liquidity early in the session until they see what's coming out of Washington today. So strap in, listeners. We got 4 years of this. Now, I say that, and then as Russell alluded to, the last time Trump rolled into office, vol went to die. So it is completely contradictory. It is completely counterintuitive that the market could be on pins and needles every morning and still have vol come to die. Yet we have seen that playbook before, so don't be surprised if they ratchet it up again. Speaking of ratcheting things up, let's get out to the vol surface. Are those vol futures ratcheting up right now, listeners? Well, if you listen to the top of the show, you know the answer is no. Vol is coming in. It's not quite a vol annihilation, unless, of course, you're January. Then you're out of here. You're gone till next year. Feb slotting in to the pole position now. That Feb future down a little over 0.5 point when we kicked off the show, about 0.6 point. And the March future down about 1/3 point. Obviously, if you go all the way out, let's go all the way out to September, listeners. It's like the highest we get on the curve right now is about an 1890. So you got a nice little slope there to the curve. That front Feb future, 1640, 1890. Talking 2.5 points out there. Not bad at the end of the day. Mr. Meatball, we'll start with you, sir. We were just saying on the show a week or two ago, I believe when Jim Carroll was on with us, said it was just freakishly flat. You know, you could iron your laundry on it. It was so flat. That was a little weird. We're not quite in that paradigm anymore, but what is catching your eye out there on the vol surface this week?
Yeah, we flipped back into a nice contango, meaning the cash index is trading below February. February is trading below March. March is trading below April, and so on. Back of the curve still pretty flat, but front of the curve looks pretty normal. The future to the cash may be pricing in a little bit of, pricing in a little bit of a potential rally for VIX into Wednesday and then a pullback. But outside of that, this is about as normal a curve that we would see in normal times as you're going to get. This is a classic VIX contango formation.
Yeah, that's a good way to describe it. About as normal as you're going to get out here in VIX. As normal as VIX does get. VIX is still an oddball product at the end of the day, listeners. But as normal as it gets, dare I say it, this is it, at least for now, until we get another rogue tweet that sends us spiraling into some weird direction. Excuse me, Mr. Overby. I'm picking up some of what Russell's putting down here on the germ side. Mr. Overby, same question for you, sir. What's catching your eye out there in the vol surface this week?
Well, kind of feel what Mark is saying in that I am only a vol trader when I really think that we're at extremes. So like my one trade is the one that I mentioned. And I think that volatility, I think vol is low in the index that is named after our guest speaker here, Russell, the Russell 2000 index. And I am looking for vol to increase. And I do think that there some headlines need to be, or will be coming out, and they're going to cause volatility more than anticipated right now, and in particular in the small caps. And that's really what I'm looking at. I don't have any volatility trades on at this point in time.
Always going straight to the trade, sir. You can talk to futures too. We won't hold it against you. We won't slap you away here on the show. I know you're kind of surprised by all the snow outside your window, kind of throwing you for a loop. As we go out to Mr. Rhoads. Mr. Rhoads, sir, what is catching your eye out there on the vol surface this week, sir?
Well, everything the other guys were talking about. I am going to deviate a bit. No, we're not spending too much time on Europe right now, but something to keep in mind. Yeah. There's a major German election that will impact the March contract, and it's not showing up in VIX at all. I don't know what I'm talking to some UVX people next week to find, and I'll get a little bit more insight into that. And I'll actually be in Germany, so I can report live on the election here. How's that when it's going on? But if it looks like something's going to happen over there that might throw things into a bit of disarray, it will start to show up in the VIX term structure as well. We had the French election. It didn't show up last year. It didn't show up in the VIX term structure too much, and it actually ended up being a non-event. They're pricing the German one right now like it's going to be a non-event as well, but we all know things can change. At one point in 2016, Time Magazine went all in on Madam President. So, that's I think that's the thing that people are not paying enough attention to right now that they should be. Everybody's focused on what Trump's saying, and then also what's going on, just what's going on in the U.S. economy. And then one little final thing I wanted to say, and I don't know, I guess you guys saw Trump say that he wanted lower rates right now.
I did hear that.
Anybody
yes.
Know? Yeah, he said I want lower rates right now. So I went, I pulled up the interest rate predictor, and he didn't budge it. It didn't change at all the other day when he said that. So I think that's kind of funny. The markets are just ignoring him, and I think that's a clear indication that the markets are ignoring him.
He wants lower oil prices. He wants lower rates, and he wants it right now.
Pay attention to me. So.
Interesting stuff out here. Listen, let's see. Is anything interesting out here in the land of the mothership VIX options? Let's find out, listeners. If you're hoping for a banger day today, I don't know, maybe stay tuned. Right now, VIX still kind of getting warmed up. 341 on the tape. So we're looking for and hoping for a little bit more paper out there to start the day. But then again, when you see that the ADV is back up to a more impressive 822, that's up about 28,000 contracts from where it was this time last week. Again, coming back from that, seasonal low, it usually puts in back around mid-December. 341 does look a little light by comparison, so we'll see if VIX can kind of wake up. We're not having one of these wild whipsaw-y days like we've seen of late that really seems to gin up a lot of flow, a lot of paper out there. Let's go out to the top 10 land, see what we're seeing out there. That number also looking a little bit lighter as well. Only cost you 181,000 contracts to break into the top 10. No surprise there. Jan just rolled off the board, took a lot of OI with it, so it's going to take a little time to rebuild that. But right now, 181 breaks you into the top 10. By the way, back to 8-2. Calls over puts out there in our proprietary TM top 10 VIX indicator. Out there. Let's see if we can find those two puts together, shall we, listeners? Number 10, 181,000 of the April 42 halves. So we're not messing around this week. We're going straight at it. April 42 halves. 181,000 for number 10. Number 9, if April not far out enough for you, how about number 9, 183,000 of the June 42 halves. So again, we're not messing about here, listeners. We're going straight for the jugular. And you know what? If you're saying to yourself, I hear what you're putting down. I kind of like the April. June, I like a little more. Allow me to present number 8 for you, 186,000 of the August 42 halves. You have an embarrassment of riches. You have your choice of 42 half strikes, listeners. Go ahead, pick your poison. We'll wait. Well, not really. We have a show to do, but head on over, check it out for yourselves. Just right off to the races here, listeners. I love it. Number 7, 218,000 of the Feb 23 is coming back to earth a little bit here. Number 6, 231,000 of our first of 2 puts in the top 10 this week. It is the Feb 17 puts, little meaty, little beefy out there. Number 5, 236,000 of our old pal, the Feb 15 puts. A lot of love for that 15 strike out there these days, to the downside at least. Number 4, 237,000 of the Feb 19s. One of the more reasonable strikes on this board, next to the Feb 15 and 17 puts, of course. Number 3, 281,000 of the March 20s. Number 2, now we're getting back up there, listeners, 295,000 of the Feb 60s. And for yet another week in a row here, number 1, 377,000 of the Feb 30 calls. Obviously, the Feb 30s and 60s part of that spread we talked about a few weeks ago out there. So, yeah, we've got all kinds of wild fun open for size out here in the top 10. So kind of pick your strike, pick your poison. There is something for everyone in the VIX top 10 this week, listeners. Is that the case in Russell's weekly rundown? Well, only one way to find out.
Now, Russell's weekly rundown. Now, Russell's weekly rundown.
All right, Mr. Rhoads, the floor is yours. Have at it, sir.
Rick and Morty, where they talk about reusing characters to save money.
Yeah, we reuse your theme to get the most value out of it.
That's exactly what we're doing here. All right. Monday, nobody traded any weeklies because we weren't working. Tuesday, and man, I had a heck of a time trying to find a trade that I like. On Tuesday with VIX at 15, a little under 15 and a half, somebody bought a bit of I think they bought 964. I think I wrote the number down wrong. The February 5th, 17 calls for $1.13. They sold the same number of the 20 calls for 56 cents. That gives you a cost of 57 cents for a bull call spread. Not sure how I feel about that one. I think there are probably better ways to get upside. What I just talked about, doing maybe a ratio spread or something like that. Wednesday, and also I did a lot of digging. I thought that might be an exit trade, and it wasn't. Wednesday, VIX closer to 15, down to 15.19. This is probably the closest to a trade that I kind of like. I think the risk reward dollar wise is kind of frightening. But somebody sold 100 of the February 5th 20 calls for 56 cents and bought the 30 calls for 19 cents. So they took in a whopping credit of 37 cents. We get a volatility event on my wife's birthday. They could, or the day before my wife's birthday, I guess these settle on that Wednesday morning. They could be looking at a potential loss of $9.63. So I don't know about how much I like the risk reward on that guy to be betting on lower volatility. I'd try to find an in the money put or something like that I could maybe buy that would pay off better than 37 cents based on where VIX was at the moment or something like that. I didn't dig too much, but I would prefer something like that. Another bull call spread on Wednesday with VIX down at 1481. Somebody bought 332 of the January 29th 16 calls. They're expecting a lot by next week. And they sold 332 of the 17 calls for 65 cents. They paid 36 cents. They can make 64 cents if we're above 17. That's reasonable because it wouldn't take a whole lot to get us above 17. But again, I think they're probably, if that's what you think is going to happen, probably better ways to do that, especially because if you want to try to monetize it, when you're trying to monetize these vertical spreads, you're often not going to get anywhere near that maximum profit number that I throw out there. So I would almost, I don't know, be more content, maybe buying a deeper in the money call or something like that. Thursday, VIX at 1484. Somebody bought 200 of the January 29th 17 calls for 56 cents. That's probably the trade I like the most from this week. And then finally today, not part of a spread, not sure what's going on here, but somebody bought a very specific 202 of the February 5th 50 calls, and they paid a nickel for those. It doesn't really matter, but VIX was at 1484 at that time. Nothing. There have been a lot of, wow, that's a really interesting trade when I've been going through weeklies, but that was 2024. That doesn't seem to be happening right now. And I really do try to find some interesting stuff. And there's not, the one thing that does kind of stand out to me as I go through these, not a whole lot of bearish plays using puts. If anything, it's maybe selling slightly out of the money calls, which I would consider a less aggressive way to play low VIX.
Well done, sir. Let's get out to the big options. Oh, by the way, P&L Man floating around in our chat. Good to see you there. I haven't seen you in quite some time. He's got a point I said. Want all you know that today is the 18th anniversary of you doing your show. Wow, is today the? I know we started back in January of 2007. Is today the literal day? I'll have to go look and see for myself. You could very well be spot on. You might remember better than I do, P&L Man. So good to see you floating around the chat. Thank you for it. It's hard to believe. 18 freaking years. I've been talking to you folks about vol and all sorts of other fun listeners. Madness, absolutely madness to say that. I must like it. I must like you folks because I keep coming back. Glutton for punishment a year after year. But thank you for pointing that out, P&L Man. Good to see you floating around the chat. Glad to see you're doing well there. All right, let's keep rolling out here to the land of VIX options. Seems like things may be kind of heating up a little bit since I talked about them a few minutes ago. That's about 45,000 more contracts flowing in. Let's see what's up out there. The big dog today, listeners, 762,000 contracts of the Feb 22s. That's an interesting one. We went and looked, actually, and looks like they all went up pretty much in one block. About 75,000 of these Feb 22s for 75 cents. 25 cents would be a nice deal. 75 cents earlier this morning. Interesting. You like that? Might be a good flash poll for our producers to put that out there. You know, hey, you like these Feb 22s for 75 cents? Somebody liked them to the tune of 75,000 of them this morning, followed by number 2, 24,000 of the Feb 50s. Number 3, 20,000 of the March 20s. Number 4, 19,000 of the March 16 puts. And number 5, 17,000 of the May 50s. 5 O's. Wow. Don't see a lot of May upside lighting up the tape. I guess it's that time, listeners. Yesterday, also kind of a sleepy day out there. Only 504,000 contracts on the tape. The big dog yesterday was another weird one. 68,000 of the July 50s. So once again, back to this 50 strike. That was kind of a funky one. So we did some investigating yesterday, and that one looked like, you want a little bit of funk, it looked like it was the 1950 1/8 roughly ratio vertical out. They did it for $1.41. So it was roughly, you're talking 8,000 and change versus about 68,000 of the 1950 vertical, again for $1.51. So selling 1, buying 8, shelling out $1.41 for it. I didn't really love it. You know me, I don't like those super wide kind of ratios, and I don't know why you're doing 8 and paying for it. Maybe you dial it back. Maybe you go to 6 and you get it for around even money. I don't know. I'm a crazy person. You go 5, maybe you get it for a credit. Either way, we put it out to you folks yesterday at that price, 68 cents, just for the July 50s. Are you a buyer? Are you a seller? Are you not interested? Or you prefer it as part of that ratio vertical? And exactly a third of you said, you know, I'm not interested at that price. 68 cents doesn't do it for me. About 29% said you want to sell them. 27% say you want to buy them. And a little over 10% say you prefer it as part of that funky ratio out there. Either way, that was the big dog yesterday, 68,000, followed by number 2, 36,000 of the April 45s. Number 3, 20,000 of the May 14.5 puts. Number 4, 17,000 of the May 15 puts. And number 5, about 17,000 as well. The February 35 calls. Wednesday was the big dog of the week. Well, actually, take it back. Tuesday says hello, but Wednesday impressive. 1.26 million contracts on the tape. The big dog on Wednesday, obviously, with Jan having just rolled off the board there. Usually pretty hot, and we had some movement out there as well. So nice little intraday move that gins up some volume, usually in VIX. 87,000 of the Feb 40s by number 2, 69,000 of the Feb 21s. Number 3, 65,000 of the April 42 halves. Number 4, 64,000 of the March 20s. And number 5, 55,000 of the March 25s. And then Tuesday, the true big dog of the week, 1.53 million. Of the big dog on Tuesday, 161,000 of the Feb 23s. Man, they were not messing about with those. Those were all opening. Somebody coming to play on the Feb 23s list. Number 2, 101,000 of the Jan 15 puts. Number 3, 72,000 of the Feb 15 puts. Number 4, 47,000 of the April 35s. And number 5, on an action-packed Tuesday, 47,000 of the Feb 19s. Monday obviously closed for the MLK holiday, so an interesting truncated holiday week. Let's go out to the Southern Volatility Mecca first. Mr. Meatball, sir, a lot to sink your teeth into this week. You got size prints, obviously, on Tuesday. Feb 23s, 161,000 of those bad boys. That doesn't do it for you. The Jan 15 puts, obviously gone the way of the dodo now. 101,000 of those bad boys. A size prints on Wednesday. A weirdo prints yesterday and today. Ratio verticals and just size upside today. What was catching your eye out there in VIX options this week?
Yeah, you got a pretty decent sized call by those Feb 22s today. That's by far the biggest trade. Next biggest trade is some March 16 puts, which I don't hate. Looking at yesterday, yeah, you had those April 45s. Some more of those July. Mark, I'm with you. I don't love those July 50 calls. There's a better way to do that trade. But they are, I guess the positives of what we're seeing, again, a lot of upside on Wednesday, April 42s versus Feb 40s, some March, a lot of what we're seeing this week is kind of out of the money, long position hedging, and not kind of panic or imminent volatility event type of trading. So if you're a market bull, you could argue that the engagement of this further out of the money stuff is longs and credit holders just kind of defending themselves against an outside event, not fearing some sort of large event in the near term.
And Mr. Overby, sir, when you're not plotting your own VIX trades, anything catching your eye in the world of VIX options this week, sir?
Well, one of the things that I do love is that just the volume, that we're seeing so much volume over the last couple of weeks, I guess. And if you do look at just the history of the VIX, when we get into February, there's been some days where we've had some big moves in the VIX index. So looking at that July trade, not excited. I don't know why you'd pay a nickel and go that far out. And But I do understand that maybe as we get into February, there is some opportunities to get long some VIX with the VIX down around the 15 level. I don't see the VIX going lower, but if I were to take a shot, look at the February contract with the normal Wednesday expiration, the third Wednesday in February, and maybe get long some vol. Look for the market to get above the 17 or 18 handle, and maybe we get a little pop as we get into February. That's my only real reason why I could see somebody going that far out into July and looking to try to buy something for a nickel at a 50 strike.
You know, our producers are doing the heavy lifting right now, and you know what, P&L man, it looks like you are correct. If you go all the way back to the primordial ooze, I remember this app. That's how crazy it was. The first ever episode of anything we did, episode 1. It was only one show back then. It was crazy long. It was 2 hours. It was mostly just me. We were kind of trying to break down all the big stories that were going up on the website that day. And that first episode, backdating. Remember when backdating was a huge scandal? It was 18 years ago. They were backdating the strike prices of the options they were giving to corporate executives, not accounting for that. We also talked about Apple and the Siren Song of Straddles. Oh, good stuff. Already getting into the alliterative titles way back. And that was on January 24th of 2007. So P&L man, you get a gold star. You knew the exact day. I didn't even know the exact. I just knew it was January of 2007. But wow, today is exactly the day. Wow, 18 years ago. My goodness. I remember that day like it was yesterday, which is terrifying in and of itself. Because listeners, I was a trader. What the hell did I know about talking into this brand new media known as podcast? This is pre-iPhone. It was really hard to get. You had to have an RSS reader to get it. We were pretty early on this whole podcast thing. Rogan was still dreaming about doing it. He didn't know what the podcast was. So yeah, early days for all of this kind of fun. Thank you for that, P&L man. That brings a smile to my face. 18 years ago today. Wow. My goodness. Children were born or going to college now. During that episode. Wild to say out loud. All right, listeners, is it wild out there in the land of the vol ETPs? I guess it depends what your definition of wild is. When we kicked off the show, SVIX was hanging out at about 27 and a quarter. That puts it up about 1.25 points from where it was this time last week, hanging out about 27.10 now, so giving up about 0.15 of that out there. Only about 2,000 contracts on the tape when we kicked off the show. Right now, it's up to about a whopping 2,700, so not exactly lighting the world on fire. The ADV, 8,900, that's down about 500 from last week. I got a feeling it's going to be rolling in the wrong direction as well after today. If you're wondering what the big dog position is out there in SVIX options, such as it is, it's the March 15 puts, about 3,100 of those bad boys out there. So interesting stuff across the board. Mr. Rhoads, I know you've been watching a lot of SVIX out there. What's catching your eye out there of late, sir?
I have the saving grace in my portfolio right now because I'm short S&P versus my long SVIX, and my that position is working its way down, man. I think I'll be down to a quarter of a normal position if we stay above 27 today. So it's benefiting me a bit. I try to sell calls against it periodically. It still seems to be a tough one to trade options against, unless you're kind of like me and okay with only doing one side of the trade and either having the option expire or have the ETP called away from you. Our UVIX did that massive reverse split. So now instead of trading, 2 or 300 or 2 or 3,000 ETFs, I'm trading 2 or 300, but I'm still keeping an eye on that. And from the pre-speech, just to jump all over the place on you, that I am compiling the data slowly but surely on replicating that UVIX thing that I've talked about on here a few times, where buy on Friday and sell first thing on Monday morning. But what I'm doing is I'm using the front month VIX future, buy it on the close and then sell it at 8:30 Chicago time on Monday morning. And right now it looks like it's not as good as what you get for buying UVIX for over the weekend. I'm assuming 6,500 for margin. And the average return, it's positive, but it's only about 11 basis points. It's about 40 basis points with UVIX. So I guess I got to go out there and get the second month data and take a look at doing calendar spreads by myself and how that would work over the weekend.
Yeah, a little bit easier to throw, 1,000, maybe a couple of thousand shares in your back pocket of UVIX for a weekend when it's $3, right? When it's $30, it gets a little bit more laborious, a little bit more capital intensive. I was going to ask you about that. It makes sense to maybe experiment with some other less capital intensive ways of going about that. Doesn't sound like the futures are it, but yeah, it's worth investigating out there. I'm curious, listeners, for all of you out there who've been kind of playing along with Russell's secret weekend UVIX trade. Have you have any ways you've tried to implement it now that UVIX is back to being a little bit more of an untamed beast? We'll get to more UVIX in a second. Russell get me all excited about UVIX. Let's finish up on SVIX first. Mr. Meatball, I know you're not chatting to us. You're out there diving deep into those SVIX waters. They've been kind of challenging waters of late. What's been catching your eye out there, sir?
Yeah, it's choppy. But right now, with the VIX in the formation that it's in, with the VIX term structure, that is going to be bullish SVIX. On a daily basis, the ETF is making about 13 cents a day. Oh no, about 13 cents a day. I love the UVIX reverse split. It makes it tradable again for those of us that are using it to kind of trade volatility. It makes it much more fun to trade. And so now we've got all the vol products that actually have, a real price, which makes the whole space a lot more fun.
Yeah. Remember last time you wanted UVIX to reverse split, then it got all the way up to 40 and we were all like, whoa, no, that's a little bit too much. UVIX around 30. It's a little more exciting. You're right, in the high 20s right now. In fact, let's break it down. UVIX, when we kicked off the show, listeners, hanging out at about a 27.20. Have you been getting back in on that juicy UVIX downside up to about 27.5 again now as we've been talking? So things starting to firm up a little bit out there from a vol perspective, as it looks like that little bit of a sell-off starting to intensify. What is not intensifying out there right now is the volume out there in UVIX. It kind of fell off a cliff after the reverse split, as we normally see. And looking today, it is still kind of languishing quite a bit. Only 6,200 contracts on the tape. The ADV is 48,000. So that's over already 6,000 lower than last week. It's still got 8x to go to get that today. I don't think we're going to get there today, listeners. So UVIX, people still coming to grips. So that happens, reverse split. All of a sudden the chains get all wonky. The options weren't even available for a day or so in a lot of brokers out there. So yeah, it's a lot of funkiness out there. Let's run through some of these really quickly. UVXY 1780 when we kicked off the show, down about 1.2 points. About 46,000 contracts on the tape when we kicked off the show. The ADV is 108, so kind of treading water out there. And everyone's favorite, VXX 4170 when we kicked off the show. Down nearly 2 points from last week. Only about 15,000 contracts on the tape when we kicked off the show. The ADV is 38,000. Down about 1,000. We got some earnings vol to break into too. We talked about that on some other shows. I know there was a question Russell was angling to get to on the show a couple of weeks ago. We ran out of time. Let's see if we can squeeze it now. A little bit of the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, let's get to a little bit of your vol voicemail really quickly. During the show last week, we were talking about that really weird tight vertical we saw in VIX options last week. It was a Jan 1819 going up tens of thousands of times over and over again for 7 to 8 cents. It just seemed like a weird, I think the Rock Lobster was on with us last week, is one of those, as he likes to call them, those kissing your sister type trades. It just seemed kind of weird. It wasn't a roll. It was just weird. And so we said, at that price, do you like that? You want to buy it for 8 cents? You'd rather sell it? Is it just too tight to really get you excited, or you want to do something else? And 2/3 if you said you want to buy it for 8 cents. So who am I to second guess such things? If you like really tight VIX spreads, hey, to each their own out there. 11.1% say you'd rather sell. Yeah, you don't want to sell it. What do you want to sell that for? And 22.2% say they'd rather do something else with that spread. Let's get out to this question. He's been waiting patiently for a while here on the show. This comes from a great handle, by the way. Man o' War. Man o' War wants to know. He says, hello, Volatility crew. Right back at you, Man o' War. Saw this release and was curious if you were planning to discuss it on the show. Thanks either way. Well, obviously, since it's been a while since this release came out, we did not, Man of War. But because you asked so nicely, we will do so now. This was the release, came out, I believe, in late Q3, early Q4 of last year, about SIBO publishing their new 20-year Treasury bond ETF VIX, aka the VIX of TLT. Kind of intriguing, so they're expanding their purview of VIX, looking into the fixed income space. We all know there's the MOVE index out there. We talked about it many times on this show. It doesn't live up to expectations for a wide variety of reasons we've covered many times out there on the show. Now, this is obviously not a tradable thing, but the VIX of TLT could be intriguing to many. I know, Russell, this one really intrigued you. So what do you have to say here for Mr. Man o' War about the VIX of TLT, sir?
Well, first off, they had it that I don't feel like this is new. I feel like there was always that it was one of the ETFs that they had, a VIX for. And honestly, sometimes things get explored, get announced when whatever market you're taking a look at is really hot. And, for the majority of the time that you have been on the air, bond's been boring, and the original VIX, they changed the multiplier on this so that it's a bigger number. But I remember the interest rate ETF VIXs always being in single digits, which we just talked about. Nobody wants to trade a single digit ETF. So why wouldn't you, make this number a bit higher as well? The big issue with it is the equity market has more periods of high volatility than the bond market. And which makes VIX a much more better tradable complex. My assumption is that's what they're thinking about doing with VXTLT, that they want to start trading on it, etc. And I don't think it's something that that's going to have enough volatility to get people interested in it.
Yeah, it's funny you said that, because that was my first thought when I saw this. I was like, didn't we already have something like this?
They changed it. It's like, and I don't know if here's one for you. The original VIX was, they multiplied 10 times that volatility number. So like today it would be at 140. So the early VIX data, I would have to divide all those numbers to get to compare them to today. And I feel like they just did the reverse with this fixed income oriented one, just to make it a better number and maybe a more tradable number. Brian got to talk about his great trading. I'll talk about my cool product stuff. I brought this up years ago and, got shot down because I would always get shouted down over there. But make it a better number if you want people to trade it.
There you go. Not bitter at all, are you? There.
Oh, I'm not bitter. I love those guys.
Mr. Meatball, really quickly, I know you're a fan of TLT. Does a little VIX TLT action excite you, sir?
I mean, it has these moments where it does, but the people that are trading credit are gonna, if they want to trade vol, they're gonna go into the Treasury futures options. They're probably not gonna trade these futures. I think sticking to equity markets and them digging into variance is where they're gonna see growth.
Yeah, if you want something like this, what was this, Man o' War? Like, they used to do this when they calculated it on the CME products. CME and SIBO went their different ways a few years ago. CME obviously does it themselves now. We talk about this every week on TWIFO. So you can go get the CVOL for every Treasury product you want, or you can do the aggregate for the entire complex. So this is kind of already being disseminated and on the direct treasury options as opposed to, TLT, a little bit of a Franken product. So just something to bear in mind. If you want the direct beast, you can go get it on CVol. Obviously not tradable either. So if that's your issue, then not going to solve that, but maybe a little bit more direct. But a great question. Nonetheless, we love our listeners out. You're pointing out our anniversaries. You're pointing out great products. We love you all out there as we keep on rolling. Let's see if the Vol gods love us. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, let's dance. Time for crystal ball madness. I said we were at about a 1465 or so to start the show. 1475, where were we? 1475 to start the show. And we have ticked up a little bit now, a little bit north of the 15 handle, 1504 to be precise, coming into the end of the show. So Vol starting to get a little firmer into the latter half of the session. Oh, actually, he's going to be mad. We just ticked. He's going to say I cheated him. A Rock Lobster on the show last week doing his America Columbus appropriate 1492, missing out by point. Tell you what, I will re-rack it right now so you can't accuse me of skullduggery, and we'll see if it's ticked down. 1506. It's moving the wrong way, Andrew. I'm sorry. So, so close, but no cigar. 0.12 away. Outside our very demanding margin of victory. I can laugh because I was nowhere close. I was 1635, so I was feeling more juice. Maybe if I wait a little bit by the end of the day, I'll be right. But as of right now, I am not correct. Which means we go around the horn. We had a close bullseye. We kicked off the new year, our first episode with the bullseye. I believe it was Steve Sosnick. I have hit one since then, but we'll see. No joy for me today, and the Rock Lobster coming perilously close. That means, you know what, Mr. Meatball, I will give you the reflected pride of the Rock Lobster. He was the closest, so you get to go first. What are you feeling for Vol this time next week?
Ooh, I think we could see Vol get a little bit of a beat up into Wednesday, but on the whole, I think the market is going to be green next week and volatility down, and maybe down a decent amount. I'm going to go 1331.
1331, little palindromic nonsense. And if folks want more Meatball goodness in their lives, where should they go? What should they do?
Follow me on Twitter at OptionPit. Head over to optionpit.com and sign up for my Trader's Edge newsletter. You'll get great content and all kinds of lovely stuff that you won't want to miss.
Lovely stuff indeed. Check them out, optionpit.com. As the man says, Brian, I will give you a hint. I'll let you go last because I'm also going to ask you for your end of year. Oh, but Mr. Meatball, before you go, have you done an end of year VIX prediction for us? I think you.
I don't know if I have or not.
Let's put it down again just to make sure. End of year for Mark. Go ahead.
Let's say 1441.
Keeping the palindrome. You gotta live the gimmick, right?
I do. I got to stay on brand.
All right, 1441 for the end of the year for the Meatball. Brian, start the gears spinning. I will ask you that same question in a few minutes. But first, we go out to Mr. Rhoads. Mr. Rhoads, sir, what are you feeling for Vol? I already have your end of year pick. So what are you thinking for Vol next week?
What is my end of the year pick? If you don't know it, that's okay.
I have to go pull it up. I can find it while you talk.
Don't worry about it. Don't worry. I was just curious because, I got that short-term memory thing going. For next week, 1447.
1447. And we will see if we can go find your end-of-year pick. I will go next to buy Brian a little bit more time. I have to reveal my end-of-year pick as well. Oh, fun stuff. All right, so listeners, first off, next week, it's a weird time we are here in Vol, hanging out at a 15 even right now. I'm gonna say we get a little spicier. I'm gonna say 15 double for next week. And for my end of year, drum roll, I don't like to reveal it till after the poll is closed. I never like messing with the numbers out there. Last year I was the second closest. I think I was like 0.3 away, right behind Steve Sosnick, who got a bullseye, crazily enough. So I was hot on the heels. I couldn't make it happen last week. So end of year listeners, most of you are going spicy. You're going north of 20 for the end of the year. I don't know if I quite feel that much juice, but I feel, weirdly enough, I feel not that dissimilar from where we went out this year. I'm going to say a 1742 for my end of the year VIX crystal ball. Will I make it into the Hall of Fame this year? Tune in at the end of the year to find out. All right, Brian, I bought you as much time as humanly possible. First off, where are you feeling for Vol next week? And then also, what's your end of year prediction, sir?
Well, I'm rooting for Vol because, like I said, one of my bigger positions is that IWM straddle. So I want Vol to go up overall. So I'm going to go a little bit higher than everyone here. I think we'll go 1601 on Vol on the VIX, and hopefully that will translate into some volatility in the IWM. And then at the end of the year, the number is going to be 1275. We're going to get the Santa Claus rally back.
Yeah, it's interesting. Maybe I've been infected by the
flu
listeners.
and let Santa back down the chimney, and that's where we're going to be at.
Historically, you should be more correct than I, but you never know. Just feeling a little spicy towards the end of the year. What are you folks feeling out there? By the way, in our chat, we got a bunch of, oh my God, Option God. What are you doing to me? You're carping my end of year, but you made it for today, 1742. I'll forgive you out there. We got a 14 handle for next week. A lot of 14 handles coming in. So you're feeling a little bit of downside. I could see that for next week. Get your predictions in end of the day today, listeners, if you want to win fabulous prizes here. If you're right next week, we shall see. All right, that's going to do it for us on Vol Views this week. I hope you had a good trading week. If you want to have a little bit more fun, if you're in the pro already, hang out. We'll be back in a minute or two, myself and Brian, to talk all things oddities. But before we go, let's go around the horn. Brian, if they want to check out what you got cooking in the land of the playbook, where should they go? What should they do?
Well, the simplest thing is to just follow me on x.com. Handle is at my name, so at Brian Overby. And doing a lot of things, putting out a lot of material going into 2025. Probably more, doing more events than I think I ever have, honestly.
There you go. Check him out, optionsplaybook.com. Buy a copy of his book. He owns it free and clear now, so all that money goes to him so he can pay the kid to come shovel all the snow on his lawn. Buy a book, optionsplaybook.com.
And by the way, Mark, I wanted to toss out there, I did actually go for a little bit of a boat ride on the day of the snow. You were teasing me that I wasn't out, but I did do that. So there you go, back at you.
Is that even legal? Is it legal to snowboat down there in Carolina? I don't think so. I have to check your local regulations.
It is legal if you have a cover on your boat, so that's really about it.
Snowboating. There you go. That's not a thing most people can say they have done. So there you go, listeners. Check them out over there. Land of the Playbook, optionsplaybook.com. And Mr. Rhoads, if folks want a little bit of Dr. Vic's goodness in their lives, where should they go? What should they do?
I'm always writing on my Substack, and I'm teamed up with a professor at IU, and we do weekly videos on silly questions that we get from undergrads and how we go about explaining things. And in fact, this week's is what is VIX? Because I had a student ask me that. I told him to go read a book because, I want to make some money off my books. But no, I kind of explained it. So there. But I continue to do that. You guys, I know Mark Sebastian knows Larissa Miller. She's now Larissa Ademiak, and she's the bomb as far as trying to explain option stuff, et cetera.
Well, there you go. Another plug for another random person. We love it. The more the merrier out there in Russell land. You can check out what's your Substack as well? Hit your Substack really quick.
It's just my full name, russellrhoads.substack.com.
There you go. Check him out, listeners, over there. Everyone's hitting up I got to get on the Substack. All these years later on Substack. It's a hot thing again. Check it out, substack.com. It's going to do it for us on the on-demand side. Thanks to all of you who joined us throughout the week. If you missed anything, it's all hanging out for you on the old network feed, which, again, had its origins today, 18 years ago. Wild. Absolutely wild. Thanks for that nugget, P&L man. Speaking of all our pro folks, actually, hang out. We'll be back in about 30 seconds to hold court on all things weird and wild with a whole bunch of options oddities. If you want to join us, listeners, head on over to the pro, theoptionsinsider.com/pro. Get your name in the hat before it's too late. Should be a fun one. Back again next Monday with the option block all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.